Hello, this is Chris Hadley with Fairway Independent Mortgage. Thank you for tuning in to our 4C series, and I'll be continuing our talk about the home buying process with these next few videos. In this video, I'll be discussing the do's and don'ts when it comes to applying for a mortgage loan and as you go through the home buying process. We covered some of this information with our 4C series, but in this video I'll be very specific about what you should and shouldn't do as you prepare to buy a home, and more importantly as you go under contract for that home. Let's start with the don'ts. It's important that you don't close or open any asset accounts or even transfer money between these accounts before talking to your loan officer. Don't deposit any money that doesn't come directly from your automatic payroll deposits, especially if it's cash or from the sale of personal property. Some loan programs require substantial documentation as to the source of these types of deposits, and it's much easier to create that paper trail as you go along on the front side rather than trying to create it later on down the road. You also don't want to change jobs or employers without inquiring about how this could affect your loan. This could impact your loan very drastically and could even cause your loan to be declined. Don't make any major purchases prior to or while you're under contract, because this could affect if you even qualify for a loan. Lastly, you don't want to open any new credit cards or increase any liabilities or debt during the loan process. Now that we have the negatives out of the way, let's discuss the do's when applying for your mortgage loan. You want to make sure that you keep all your original bank statements. Now I know with our world being more and more increasingly paperless, you most likely won't have an issue with this, but for those of you who do keep your paper statements, be sure to make sure you keep the 2 or 3 most recent months worth, and keep all pages of them even if they're blank, because as we're going through this process we're going to need the entire statement from you. You also need to provide proof of your earnest money deposit from your bank account or from your acceptable gift funds. If you do have gift funds, you want to make sure that you notify your loan officer so they can deem them to be acceptable or not, and be sure to do this before you give these funds to your realtor. If you have a current home that you'll be selling, you'll want to make sure to provide all the necessary documentation for the sale of this home. This would include things like your sales contract, your closing disclosure once you receive it, and if applicable, any employer relocation buyout programs. Make sure to let your loan officer know if you plan to receive any gift funds from for closing, because gift funds are only acceptable if certain criteria are met. And remember, advanced on credit cards or personal lines of credit are never ever acceptable. You also want to notify your loan officer if there are any changes to your employment during the process. This includes if you're receiving a pay raise or promotion, or if your pay changes really in any way. Lastly, we want to make you aware that we're going to be re-pulling your credit right before closing. This is why we don't want to see any changes to your credit, because it could cause some last minute issues that could even disqualify you right at the last minute for your loan. Thank you for tuning in to this week's video on the home buying process. Next week we'll be talking about pre-approvals and pre-qualifications and how they differ.